In this week's episode of the Stockscores Market Minutes, I'm going to talk about what an alpha stock is and why it's important to know. Then I'll take a look at the overall stock market indexes and tell you whether there is more weakness to come in the week ahead. Of course, we'll do our regular market scanning exercise in search of opportunities and look at the trade of the week. That's all coming right up. All right, so what is an alpha stock? Well, as we know, most stocks have a correlation to the overall stock market. That means that most of the time, stocks will move with what the major indexes do. If the market goes up, then most stocks go up. If the market goes down, most stocks go down. It's not rocket science. We generally understand that. There are, however, times when some stocks, some of the time, will do things dramatically different than the market, either moving much more quickly or moving counter to what the overall market does. We call these alpha stocks. They're really trading on their own story, and they usually have the following characteristics. They're trading with abnormal volume, they're trading with abnormal price behavior, and they're breaking from low volatility. So what I do as a trader is I look for stocks with these characteristics, the abnormal volume being the most important. Because if I want to find a stock that can move on its own story, which can move much quicker than the overall market, even regardless of what the market is doing, then that abnormal volume is going to be the best clue. And if you go back and look at the stocks that have beat the market over the last 6 days, 6 months, doesn't matter, you will find that most of them start their market-beating trends with abnormal volume. All right, let's get into this week's market analysis, starting us off with the US markets. And here I have a chart of the S&P 500. This is the 30-day, 60-minute chart. And you can see that we broke this little short-term upward trend line coming into this week, and that started this downward move. So we're now into a downward sloping channel. That's pretty expected because this rally here was into long-term resistance that we talked about in the past couple of weeks. And so when markets rally into resistance, they usually get stuck at resistance, and that is certainly what happened this week. I think that we now probably grind our way a little lower, but ultimately not a whole lot lower. I think outside of a few days, we probably start to move back up to those highs where we should get stuck again. Now, looking at the long-term chart, it looks a little bit more easy to understand this pattern. There are those long-term highs. You can see that the bottoms are rising on this chart. That means that the buyers are in control, and we've really just had 2 or 3 weeks of quiet trading. Remember that we are at the end of the quarter, and so there's not a lot of earnings related news coming out in the market, and that just means investors don't have a whole lot to be excited about. Really, the focus is on China-US trade, as it has been for some time. We've got some events coming on up in October that could really be a catalyst for sharp moves one way or the other, and if we get some good news, perhaps we'll get a breakout. If we get some bad news, we may break that upward trend line. Moving along to the Russell 2000, which of course is the US small cap stocks, and it too hit resistance, got stuck at resistance, and is now pulling back. Probably doesn't pull back a whole lot farther. That's kind of short-term support, and then we have that longer-term support there. So I do think that this market will bounce back soon, and we may get some good action, perhaps first or second week of October. We'll have to keep an eye on that. On to the Canadian markets, and here is the TSX 60, which really outperformed the S&P 500, but you can see also that it broke from a downward or from a falling top. So there's your falling top, and we broke the upward trend line, and that just sets up for a little bit of a downward sloping channel. How low can it go? Well, maybe into this zone here. It's not too far to go. Really, it's going to depend on news flow. If there's some positive news on trade or some positive news on the economy, perhaps earnings, as we start to get earnings announcements coming out, perhaps they won't look so bad, maybe better than expected. That could be a catalyst to break that downward sloping channel. All right, on to the TSX on the short-term week, or pardon me, the long-term weekly chart. And you can see that the TSX has actually broken out to new highs. It did so from some volatility, and because it did so from volatility, that usually means that we pull back before we go higher. I do think the market is likely to go higher in the weeks ahead, but perhaps in the short term, the next 1 or 2 weeks, we still could see a little bit more of a pullback before it tries to bounce. The TSX Venture, of course, is the microcap stocks in Canada. It's been trying to break that downward trend line. It tried there. It failed to break up from a rising bottom, and then it tried to make a comeback here, and this week it again failed. The cannabis sector, a large part of the reason there, but also we've seen a fall off in some of the gold stocks, which have a heavy concentration on this market. So generally speaking, there's not great action on the TSX Venture, but there are often a lot of alpha stocks on the TSX Venture. And so even though the overall market doesn't look very good, you can get some good surprises out of this market because these stocks are very alpha type stocks. On to currencies. US dollar, of course, has been the strong currency for some time, and it continues to be that way. We are trending higher in a nice upward sloping channel. We actually went to new local highs this week, and that means the bulls are still in control, and I expect this market to continue higher. The strength in the US dollar always weighs a little bit on the Canadian dollar. The Canadian dollar not going down as much as the US dollar is going up, so it's kind of hanging in there. But still, we haven't really done much since we broke the downward trend line. We're trying to build this rising bottom. We then need to break out through this resistance level. I kind of feel like the Canadian dollar is just destined to go sideways near term. On to interest rates. And of course, we always like to look at the TLT, which is the ETF for the 20-year US Treasury bonds. If this is going up, interest rates are going down. We went parabolic. We broke the parabolic trend. Now we're building a little bit of a pennant pattern perhaps. I think that this market is likely to go sideways, possibly even lower near term. So I wouldn't get too excited about interest rates going lower in the short term until this pattern starts to stabilize. And on to commodities. Of course, we always like to look at gold and silver. Here's the gold chart, which has been one of the top performing sectors of the year. And currently it's in a little flag pattern after this upward move. So what tends to happen is you move up and then you got to take a break. The question that we have to ask is, are we going to break out through the flag? If so, then it continues higher. But if we instead break down from the falling top, which we've done, we've got the falling top so far. If we start to break down through that 140 level on the GLD, I would worry that there is more weakness ahead. So I think you have to be a little bit cautious right now. Only get bullish again if this market can move up through the 145 level on the GLD, and be cautious if it moves down through 140. On to oil. You know, a couple of weeks ago, we had that break higher when the Saudi oil fields were bombed, and I cautioned investors about being too aggressive with buying stocks because typically those sort of news-related moves in oil, those unique events that are surprises, they don't usually last. And that is exactly what has happened. We had the pop, and then oil has come right back into its trading range again. And so that's really a failed break. It never really made much of a break because it closed at near the lows of the week 2 weeks ago, and we're back into the pattern now. So I think we're sort of back in that neutral pattern. We can either break this upward trend line, which would be bearish, or we can make another attempt at breaking the downward trend line, which would be bullish. But for now, I'm relatively neutral, maybe slightly negative on oil. And finally, the fear chart. Of course, we look at the VXX as a proxy for investor concern, investor fear, and we've had, a pretty good run to the upside this past week. Not a strong one, but it is showing that there's a little bit of fear coming into the market, and that coincides with a little bit of a pullback that we had in equities. I don't think this is a major concern yet, but something to keep an eye on. So my ratings then: US stocks neutral long-term, bearish short-term. Canadian stocks still bullish long-term but neutral short-term. Gold neutral on both time frames, and oil long-term neutral, short-term bullish. It is trying to hold in there, but it has some work to do. Stocks drifted lower this week, reasonable given the recent run up into resistance. Again, we expect when markets rally into resistance, they get stuck there. What we want to watch for is a break back up toward the highs if there is any positive news on trade or earnings, and that could happen as soon as the week after this, coming week. Earnings season will start to roll out next week. Gold could reverse its upward trend soon, so you want to keep an eye on that, as we do have that falling top on oil. Oil failed to break its downward trend, but it's still trying to hang in there, and fear is rising. All right, so let's take a look at the Stockscores market scan. And what we're going to do this week is do my scan that I like to run for longer term trades. It's called the Stockscores Simple Weekly. I can run it on the Canadian market or the US market, and so we're going to run it on the Canadian market this week. Just jump into the Stockscores website. And before I show you the market scan tool, I just want to let you know that I've got a bunch of free webinars coming up. So if you go into the upcoming events section of the website, just click on upcoming events, and go down the page a little bit, you will see there all of the different topics that are coming up. These are all free webinars, and I'm happy to do more. If you want me to do more free educational content on YouTube or on the different webinars that I do, just click on the thumbs up button, the like button on the channel here. Leave a comment if you like with some possible topics that you'd like me to visit, and I will do my best to make everyone happy in that regard. All right, so let's go into the market scan tool, and we're going to select market scan, and I'm going to select the Stockscores Simple Canada this week on the weekly side. So there you see Stockscores Simple Weekly Canada, and I'm going to click on that and run the scan. The reason I chose Canada over the US this week is because the Canadian market is a little bit stronger, and so I'm hoping to find something a little bit better. It was kind of a lousy week for both exchanges, so I'm not sure that we're going to see a lot of good opportunity. But the first up here is this Freshie Company, which is like a fast food restaurant. I think it's something to keep an eye on, and I don't like it yet, but I like that it's building this rising bottom here, and that could be the start of something. So if this stock could break up through the 325 level with some abnormal trading activity, some abnormal volume, some abnormal price action, that would be encouraging. Something to keep an eye on. I wouldn't do anything on it yet, but definitely keep a watch on that stock because I like the pattern that's building. So Storage Vault is, I think, one that we talked about in recent weeks. This is a beautiful chart pattern break about 4 weeks ago when the stock broke up from this ascending triangle pattern. So here we have the pattern, there's the ascending triangle, and there was the breakout right there. Now here we are 3 or 4 weeks later, and we've got a little bit more follow through there. I think this stock has a good chance to outperform. That long-term chart looks pretty good. Moving along, this is also interesting to me. This is a REIT, a real estate investment trust. And what I like here is the abnormal activity that's breaking from these rising bottoms. So here we have one low, and then the next low is higher, and then the next low is higher, and we're breaking through resistance here. Volume upticked a little bit on Friday, and so I think that's promising. I'm a little bit concerned about this resistance level, but you know, if you're looking for that longer term trade setup where you've got this nice break from, call it a pennant pattern or an ascending triangle, whatever you want to call it, but look at the yield, it's also quite good. I don't know if they'll be able to maintain that yield, but a 6.5% yield on a stock that looks more likely to go higher than lower is interesting. We'll do a couple more here. You know, this stock has obviously been doing well, but to buy it now is too much of a chase. One of the things you always want to watch for is when stocks rally into resistance, they're probably going to get stuck there. And there's the downward trend line of resistance. We're kind of right at it, and I think that means a good chance that we pull back a little bit. Really, this stock started its upward move there. I would be cautious about chasing this one higher, although there's no real reason to sell it yet because it's still in good shape. So that's the kind of thinking that I can help you learn through the different educational courses that we offer at Stockscores. You can go into the trader training section of the website to learn more about that. Here's another trust unit. This stock breaking out through this little sideways trading pattern with some good volume. It's going to find some resistance there. Actually, volume wasn't all that strong, so that's a bit of a concern. If I was going to give this a rating, I'd probably give it a 6 out of 10. I like the price action. I wish the volume was stronger. We'll finish out this page and then we'll move on to our day trade of the week. Don't particularly like that one, and don't particularly like that. Too late. This is another one here that, you know, I talked earlier in the presentation about focusing on the stocks that start these abnormal price moves with breaks from low volatility. Well, there you see an example of that. That was maybe 8 weeks ago. That abnormal break through resistance, a stock that's yielding 4.86%, started its run there. If you own it, great to hold it. I wouldn't buy it here. I think it's too late. But that's the kind of thing that we're looking for when we do these market scans. All right, so let's get back into the presentation. We're going to look at the day trade of the week. And this is, again, more of an educational thing. Obviously, these are trades that happened the previous week. And in this case, it's a stock named URBN is the symbol. And it gave us a good setup late last week on Friday when it broke with an action candle, which is what we always look for, these action candles, from low volatility to start the day. And what I want everyone to notice is how strong the volume was. That's that sign of alpha that we look for. And whether you are day trading, swing trading, position trading, when you see that strong volume coming into a stock, you will know that that stock has got some excitement that has investors interested. And even if the market goes down, these stocks can do well because they are alpha stocks. So in this case, the economics of the trade are as follows. For $100 of risk, the trade required a position of 240 shares. That is a $6,000 position, but of course you can margin day trades 3 to 1, so let's call it 20-20 in capital. That ultimately closed on a day when the market moved down. It actually moved up 2.4 RR, which is reward for risk, which means for $100 of risk, you made a $240 gain. That's just under 12% return on a trade that was held for less than a day. And so that's the kind of trades we like to see, these alpha stocks that make these abnormal moves really nicely. All right, well, that has been the Stockscores market minutes for September 30th, 2019. Hope you've enjoyed the content. If so, please click on the subscribe button, like the channel, like the this week's video. That would be great if you click on that as well. Have a great week in the market and trade well.